Okay, good morning, traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, October 20th. Mike Boutros with you on the horn. Hey, Marcin, Jay, Pete, Rohan, Ted, great to see you guys in the here this morning. So, got a little bit deeper of a dollar pullback from yesterday, pushed all kinds of trades into some interesting areas, but they're not all dollar weakness per se. So we're seeing Aussie into support, Kiwi into support, dollar Swiss into support. That's dollar weakness. And it's kind of a split decision. So we'll go over the rounds here today. We'll hit DXY, Aussie, Kiwi, Swissy, Euro, Sterling, and SPX. Throw a little gold update on there as well. And that's what's on my list. It's more of a wait and see, guys. We kind of need to look for some of these trades to get in some nice areas before we get too heavily involved. But any other questions or trade setups, as always, feel free to throw them on the message board at any time. So here is what we look like on DXY. So, and here was our last update here on DXY. So I wanted to highlight this near-term pitchfork. It turns out that we're already trying to break the lower bounds. The level we're looking for is weekly open support at 93.11. We've probed that. And the 50% retracement 93.24 was where we bounced yesterday. At the end of the day, on a daily basis, it's a very objective monthly opening range, okay? Here's your monthly open. You set a monthly high, you set a monthly low in the first 12 days of trade, and we've been trading in that range ever since. Right below yearly slope resistance off the March highs, very basic. Again, this is like a rudimentary setup, but there's just no Momo right now. There's no momentum to give us indication or clear-cut directional bias on the near term. Here's the scalp. First of all, before we go there, let me go really quick. DXY in the weekly, right? The range of influence, 92.89, 92.87, or 93, excuse me, 87 on a closed basis. That's what we need to clear. This is the third consecutive week we're holding that range below key resistance. So again, daily chart signals the same effect. Intraday looks like this, right? So we've kind of already probed that 50. You know, I don't really want to stress this slope, guys. We only had a couple of touch points. At the end of the day, let's just scratch. Let me just show you this. This is what we're looking at. Here's your monthly open. Here's your monthly opening range high. Here's your monthly opening range low, right? Now, if we were just to work with this into the US trade session, this slope, what I would want to say to you is this. If we do get recovery back above this slope, and specifically, you know, let me just stretch that retracement to the new low, specifically back above the 618. Here, okay, that would be constructive. That would be the indication, the signal that this was some sort of exhaustion low. You're getting divergence into the low, right ahead of the monthly range lows. If we were to buckle back above, it would be certainly for me that exhaustive down trade we're looking for since the start of the week. I was hoping this would hold. We've already broken it. So not out of the woods yet as far as, or not, we don't have clarity or conviction yet of the resumptive trade lower for the dollar. I'm still on the sidelines here. Rohan, good question. He says, gun to your head, most likely scenario. If you put a pistol to my head, I say, I'll blow your brains out, Mike, unless you tell me what your favorite scenario is. Honestly, Rohan, it would be for a fake out right here. Either another drop into the US trade session, but really quickly ahead of the European close, recovery back above 93.40, right? That would be, for me, a decent signal long against that short, against that low. Look to play the recovery, at least into the opening range highs of the week, which would take you to the opening range highs, or the open rather, of the entire month. The October opens 93.80. I'm only looking to play within the monthly range until it clears. All I got to say to you guys now is this is very precarious. So all things held constant, Rohan, aside from my humble opinion, what I want to happen, market doesn't give a damn what I want. If this continues and holds resistance at that slope and pushes lower, you're on to 92.90. It's the 618 of the entire rally, right? So don't want to get too stubborn on this. Just as a disclaimer, I do not have positioning on this right now, but levels here for DXY. So what does that mean for euro? Well, euro made a topside breach. I know in the swing trades we still have that stop we've had forever at 1840. Just ahead of that, guys, there's some problem areas. And just on the tail end of that, which is a level that I've been talking to you guys about for a while, is 1850, 1860. Again, on this trade, ideally, Rohan, gun pistol to my head, it fails on a spike into 1830. Your objective monthly range highs, you get a test of the monthly range highs, maybe even slope, then look to reassess if this downslope is going to hold. Euro on the daily chart, still pretty precarious, right? Still pretty precarious. So want to see a reaction to this zone up here. Want to see the reaction to the zone up here. Again, just a clean monthly opening range, right? This is why I can't get excited about pushing along, can't get excited about chasing this because you haven't even cleared the monthly ranges yet, and there's key resistance just higher. Bear with me one moment. I just want to see what this extension looks like now. Yeah, I'd rather work with this. Let's make some adjustment here. So just adjust that 100% mark. It's 1860 is the level. Just like that. All right. So yeah, we'll take a look at oil, Rohan, for sure. For euro, looking for possible topside exhaustion on a stretch above 18 here. Okay, that's number 2. Number 3, Aussie. So Aussie dollar at support right now, critical region of support that we've been talking about for quite some time. Here's what Aussie looked like earlier in the week, or I guess this was just last night. Here was the region. We had broken the initial weekly opening range. I mean, it's still Monday, so I wouldn't even call it a weekly opening range break, but we broke the weekly open, which was 75. So we opened the week, we registered a high near 71.15. There was the break, had us looking for a drop into this key support zone. The bottom end of that zone is 70.16. The top end of that zone is 70.42. Here's 70.16, held for a couple hours. Here's the break lower. Just missed it. Okay, the low registered at 70.20, or yep, 70.20. The level 70.16. Big zone. Again, unknowingly, we've been talking about this zone for years. Here's Aussie on the weekly charts. You're looking at the objective 2020 yearly open, 70.16. You're looking at the objective 2019 yearly open, 70.42. Major pivot and price, break, resistance since the start of the year, resistance into the June rally, breakout, acceleration, support. We're there now. If DXY recovers, it would suggest Aussie will fall below the key zone. Rohan, correct. Dollar strength would be the pressure to push this lower. What's important to note is that DXY and Aussie have sort of been doing their own, their own thing. DXY has been under pressure, but so has Aussie. So not the best corollary approach to look at, Rohan. But absolutely, if we do get that recovery, it's only going to fuel the flames here. So we are looking for the break inevitably, but we are at key support right now. So I want you guys to be mindful of that. If you do get a recovery, daily resistance is back at 71.30. But the break below this, really you're looking for 68.20. It's a nice move lower. That's going to be in the objective 2016 swing low. The 38.2 of the yearly range is all the way down at 66.80. So really for me on Aussie, this is pretty important. That's the weekly chart. Here's Aussie on the daily chart. Same zone in focus. You can see even cleaner the pivots that we've seen along this slope or along this lateral plane, the lows from last month. the low close from last month. They're all here. We're there now. Look for a reaction. So the way to trade this is if you're holding shorts already, you're shaving a little off of that position, in my humble opinion. Can't tell you guys exactly what to do, but my humble opinion, I'd be taking anything off the short here, a little bit off, bringing your stops to break even or better, and let it ride. If we break 70.16 on a closed basis, I do suspect we will get an accelerated drop here. If not, the near-term risk is for a little bit of a bounce, a recovery from these levels. Questions on Aussie? Near-term resistance right here. So the weekly open 70.75. That's what I labeled for you guys last night as initial resistance. You have 70.96, which is the 618. It was the drop that we made here. I do like the level, but for me, at the end of the day, the bearish inval still needs to be like 71.20, 71.30. Okay, just above the weekly opening range highs, just above slope resistance, just above that longer dated 618. Okay, it's kind of the level I would need to invalidate the short side. It's still 71.30. Downside levels from here. Initially, I do have a 1618 extension longer dated at 90 or 69.87. Okay, so just below the 70 handle. I don't stress 236s ever, but that would be a secondary target at 69.60s. And then you're off. You're off down to the lower parallels. Room. This is big. This is big for Aussie. Now, the one thing I do want to note is that this also constituted a break of the monthly opening ranges last week. So here's your monthly open. You set a high. You test the break of the monthly opening range, or set a low. You test the break of the monthly opening range highs. It fails, and it breaks the lows. That's an opening range reversal. Still at support. Got to beat this level. Got to beat this level. Questions on Aussie? Okay. Number 4, Kiwi. Very similar scenario, although the support region there isn't quite as paramount, in my humble opinion, as it is in Aussie, but certainly it's the same setup. Here is Kiwi on the weekly charts. The weekly charts here highlight a level a little bit lower from here at 65.07 to 64.85. Okay, 20 pip region, pretty significant. Longer term slope resistance there. Basic 236 of the yearly range there. The high close for the June rally there. Okay, so just around 65. And again, these are the levels we need to clear to validate a larger reversal in Kiwi. Here's what the daily chart looks like, right? This one's a little bit more of a consolidation trade, right? So you're getting a series of higher lows, a series of lower highs, and you're looking for the breakout. Right now, this is a test of the objective monthly opening range low at 65.47. It's a test of the median line, the pitchfork that we're in, and a test of uptrend slope support. Now, this is only a 2-point touch. I do not want to stress this red line, but the fact that it converges on all those same levels we just noted adds significance, right? Adds significance. So 65.47 is the level we need to be on the downside to get the breakdown in Kiwi. Here's what it looks like now. Here's what it looked like last night, right? So we were just breaking the weekly open, looked pretty good on a move below that 618 weekly open support. First initial target 65.76, that got taken out. A little bit of a bounce break in early European trade. Here's the last level, 65.47. Look for a reaction here. Look for reaction here. Initial resistance back at 65.76. 66.09 is what I'd want to mark as bearish inval. If we are breaking lower, I would not want to see price best the weekly open. Okay, and again, downside targets are pretty clear as far as the breakdown. It's interesting that on IG client sentiment, Kiwi shows a bullish bias, whilst Aussie is slightly bearish. Rohan, I look at those daily, my friend. You want to take a grain of salt with that. You know, sentiment, specifically IG sentiment, it works great as sort of a conviction tool to measure the level of which you're willing to push a trade. But I'd be careful with using that as any type of trade indication, right? The way that it works is that they will be sometimes on the right side of the trade as it drifts into that direction. So for example, euro is going lower, traders will start to buy, right? Because they want to do counter trend and it goes deeper and deeper. And as long as they're buying, yeah, that in essence does keep the trade short. But there's going to come a point where the buying interest is at its max and price is at the lows. And when that happens, or it's at support, you're going to look at that and say, well, they're short, so I'm going to be long. Well, you're at support though, right? So you have to always just make sure that you're taking that into account. It's lagging. It's very lacking, very lagging. So more so than whether they're in that report. And in my reports, when you see me note IG client sentiment, it's always important. The most important thing to take away from those reports, guys, is not whether they're net short or net positive. It's whether they're more net short or more net positive than the previous day, right? It's the shift in sentiment that you want to pay attention to. If there's a building short position, a lot of traders are getting short, and all of a sudden that short position is being reduced, those sometimes are times of market turns, right? Those are what you want to pay attention to. The static, well, they're more long than short. Don't pay attention to that. Make sense? He says, thank you for the context. Yeah, I look at that shift. Okay, awesome. Then you're already ahead of the game, man. Because the average retail trader will tend to look at those sentiment readings and just fade, which is kind of the concept, but it's not just a blanket statement like that. So I'm glad they brought that up. Good question. All right, so that is Kiwi looking for a major inflection off 65.47 today. Okay, if we rebound bearish inval 66.09, we'd be looking for a exhaustion high ahead of this region if we are heading lower. Okay, if we are heading lower. So that's Kiwi. Last but not least, from last night's update is Swissy. You know, I've been talking to you guys about this godforsaken range for literally, like, it seems again like years. 90-80, 90-90, we're there again. And not only are we there again, we're below it. Guys, remember, we've been following, you can always click on the previous updates, guys, to get the accompanying charts. We've been following this pivot zone for years. Okay, it's the 38.2 of the long dated advance off the lows from 2011. It's the 618 of the advance off the 2015 lows. It's been a major pivot in price. We got one weekly close below, and it's been a bobble ever since. Here we are yet again. So look, at the end of the day, this is going to be the quintessential dollar fake out. If dollar holds support, I do think you'll get one of these slopes, or one of these rather wicks, where you're way down here, but the weekly close is well back above 90-80. The weekly close is going to be what we need to watch here for validation. Here's the daily chart, right? This is the break, uptrend support, right? If we take that off the lows that we just made, this is actually a concrete break. A daily close below 90-80, again, would be very problematic. Here's the intraday chart. Looking at this more in near-term price, if you look at it at a 60-minute even, right? Broke. Here's the test of it as resistance. Obviously, some radical divergence. Not going to chase this down here. If you're holding shorts, your stop is against that high and you're waiting for that drop lower. If you're not holding shorts, do not try to chase this. You have no justification, you know, unless you're cool with like a 40, 50 pip stop on the upside. There's nothing to do for you here. Okay. If we close a northbound of 90-90, especially northbound of 91.12, that's the exhaustion trade. Look for the recovery. In that scenario, we would love to see that the dollar has kind of held its ground versus the euro as well. So guys, they're all the tide, they're turn of the tide here. We're at major pivot levels. Support on Aussie, support on Kiwi, support on Swissy. Swissy even probing support at this point. Need to see a reaction here in US trade today. Questions on Swissy? No change to any of those levels. Okay, previous update. We'll take a quick gander at some other ancillary setups. I do want to hit dollar yen real quick, and then I do want to touch base on sterling, which seems to be very popular today. Um, for some reason this week is just blowing up. Here's what's going on with dollar yen. The broader focus was for us on the decline into 105.20. You guys know that. 105.20 buckled, and then we broke upslope resistance, or downslope resistance rather, shifted our focus higher. You guys know we talked about that. Our last level of interest was right here at 105.60. I noted the 618 at 105.70, although last week, if we look at the update, those were converging, right? They were converging right here. So I was kind of hoping that this rally would fail sort of in that region. At the end of the day, here we are. We're probing 105.46 again. So I'm kind of on the sidelines here. It's doing the abominatory approach. Here's dollar yen on the monthly open. You set a low, you set a high in the first 8 days of trade, and we've been in that range ever since. Wait for the breakout here. Wait for the breakout here. Here's the slope we've been following, just to put things in perspective. Okay. Here's the upper parallel being challenged yet again, right? We challenged it here, but we highlighted that key support was so awesome. That decline was short. We actually played with that short. This breakout had us looking for a larger recovery, but I wanted to see this hold. We're there now. If you sense hesitation in my voice, that's exactly where I am. All things held constant, if that slope was a little higher, I'd be shorting this thing right now, right? I'd be shorting this thing right now, but I just don't, there's just not justification for it. There's no signal here yet. I can't fight it. And this could be just a legit breakout. I'm trying to sell. This is stupid. So I want to see what dollar yen happens. Remember, the critical resistance is just higher, which is why I'm willing to wait this out at 105.90 into 106.09. That's the same level we talked about here on support on the way down with the break, here as resistance on the way up with that hold. That's still the level to beat. So while I do want to see exhaustion like right here, right now in US trade as we speak, even if it were to correct higher, man, there's still pretty big resistance right there. I don't want to mess with this thing. So we're going to take a little bit of a side seat on dollar yen. We had a couple of decent plays back to back. I don't want to press it at this point. This extension is null and void. We've taken out that high, so this extension means nothing at this point. And the focus is on whether we get topside exhaustion here at 105.70s or you get the extension to 106, 106.09, and you look for an exhaustion trade there. Again, for me, like ideally this fails, basically here. Could be a play here. Here's what it looks like on the 30. It could hold, man. This might be actually a decent slope. Watch this into the US Open today. Weekly open break, 105.30 is what would put you back on the short side. Okay. All right. Hope that helps on the abomination. Next is we can hit gold next, Rohan. Looks like you're in a rush to see that. So let's hit gold, and then we will come back to sterling and SPX. Here's gold. Range to start the week. Range to define the month. Certainly on this trade, it has been lackluster is sort of an understatement, right? You guys know where I stand on this. I favor the deeper cut first before the resumptive trade. If dollar breaks support and collapses, again, my humble opinion, that ain't gonna happen. If dollar collapses, this thing is probably gonna rip 1935, and that's your breakout. Okay. All things held constant, man, you're in a weekly opening range, which is embedded within the monthly opening range. all embedded into downslope resistance. I, this one's gonna get, in my humble opinion, again, Rohan, you're gonna get a definitive break here. So it doesn't pay to try to front run the break of the range, because honestly, this could go either way. I just haven't had enough conviction on this to play a breakout within the range. Sure, you want to play within these tight ranges. You got really nice levels that keep hitting over and over again. 1900, 1913 has been a back and forth ping pong for the last 4 days. On the downside, 1881, 1884, still critical support. You've got the objective monthly open there as well. So like, I'm neutral, Rohan. I'm neutral on gold. Again, you guys know, larger scale, I would love to see a new low execute first before resumptive move of the entire trend. I've talked to you guys about 1837 for months. I don't want to be stubborn. That might have been the approach and the closest we get to 1837. I don't know. I don't want to get too stubborn with it, but at the end of the day, we haven't even broken downslope resistance yet, so I can't get bullish. You have to wait here. You have to wait here. So perhaps wait for failure at 1934, 35 before the short. Rohan, in a rosy tail ideal, ponytails, ponies and rainbows, yeah, I would love to see sort of failure here and then just a mean break lower. Again, I don't know if you get it. So I'm not willing to actually wait for the front run. If it just breaks lower, I just want to watch and look for an exhaustion trade, an entry for the long side off one of these lower levels. This is your September low day close. This is a basic 38.2 of the yearly range and upslope support. All right, but 1935, above that, I'm not touching it. Above that, I'm not touching it. Make sense? That is gold. Sterling and SPX is last on the list. So here's 7. British pound is something, again, everyone's looking at for some reason, while in my opinion, it's sort of the sloppiest of the majors almost, because again, you're in a monthly opening range and the weekly opening range is embedded within that above upslope support. So the only trade here, in my humble opinion, that would be a conviction trade is if you break all of those lower, right? You break 128.80, specifically 128.30, that's your monthly opening range lows. That's just a resumptive trade of the broader decline. There's nowhere to fight, right? But right now, man, we're at support. Weekly opens 29.02. The 50% retrace, which governed the lows last week, was 128.80. So again, Sterling's been something I've been like wanting to stalk for a while. This was a failure, in my opinion, of a break of a major pivot zone of resistance that we were looking for. And I loved the short. This rebound here just threw me off, and I haven't touched it since. So again, maybe it's still just a longer term rounding here before we actually make the move. Ultimately, the ideal scenario for me is a break lower, ultimately to fade that for a larger rally. I want to see 3170s eventually on this. So dollar's got to make a move. Dollar's got to make a move. Stronger versus sterling, weaker versus euro, right? Stronger versus Aussie, weaker versus again, the majors, euro and all the like. So we just got to wait for some of these decisions to clear out. Now, as far as event risk is concerned, you don't really have much by way of the US. Everyone's kind of waiting to see on this stimulus talks again, whether we get that second package or not. I think we'll give a little lift to equity markets if we get that. But where we're trading on the equity markets, let's just move on to SPX, is absolutely paramount. Guys, remember this slope? What a slope it was. I think we threw this on a webinar on Daily FX maybe 2 weeks ago on a Monday. We've been tracking it ever since. Here's the break. Here's the drop. We added this new slope yesterday, highlighted 34.20. That was the low. Here's the rebound back into resistance, 34.54. Look for resistance into this upper parallel today if we're holding lower. Bearish inval 35. Next downside targets, again, 34.20. Watch that. But the February high, 100% extension, you're looking at 33.97, 34.07. That's a bigger zone of interest where I'd be looking for a larger reaction, stronger basing in SPX. Now, again, it could be one of those moves where, and I don't even like talking about this stuff, guys, but I just want you to be prepared for the possible scenarios with the event risk to come. You can't plan on whether they're going to come up with this solution or a stimulus package or not. That's just a fool's errand. But you can imagine a scenario of what price action does if they do announce it. Either they do announce that there is stimulus package, so you see a rally into here. You're not out of the woods unless this breaks at 35. Or you hear there's no stimulus, the talks break down, market plummets into 33.97, and then again here you look for the reaction, a good area of which we would find some basing, possible larger recovery. With the same respect, it's a pivot. So anything southbound of that objective February high would be, sort of disastrous for risk. So I just love the levels. They've been so clean, and they don't happen like this very often on SPX. So I pay attention to them when they do. Watch this slope. Watch this slope. Okay, that's number 8. All right, that's everything that's on my list, guys. Kind of breezed through it today, but I'm on a real tight time crunch. So let me know if there are any other questions you'd like to review. Here we go. Marching Sterling Key looks like this. Oh man. So Sterling Key is one of those trades where I would have loved to see failure here. Didn't quite get it. Former slope support, turned resistance, 618 retracement and decline. I don't know if that's going to be a turn away from it. Not bad. Yeah, it's a near-term exhaustion in my opinion. It's a near-term exhaustion, and most importantly, it would be a false break or an exhaustive test of, excuse me, the monthly opening range. It's pretty clean. If this fails here today, forget the 50 here. If this fails here today, it's the break below 95 that would put you back in for a reversal trade. That's going to be the objective weekly open and that 38.2. I'm of the mindset for this trade that the immediate risk, again, in my humble opinion, the immediate risk is lower, but I think you want to buy that. I think you want to buy that ahead of 95. Not my favorite setup right now. Again, this is a quintessential week monthly opening range, and if this failure here today, you got to look for the near-term pullback. Make sense? Aussie Kiwi looks like this. Aussie Kiwi is another one that we were looking at because of the disparity that we were seeing in both of those teams sort of getting heavy, right? Or both of those pairs rather getting heavy. Here's the 107 level. That was our last level, is the 100% extension. Really nice target for the decline. It's holding, right? But the weekly opening range is right here. This is even tighter. Ideal scenario, you get a rebound off this, right? You get a rebound off this just because you've already probed that 100% extension. This is a break of the monthly opening range, so you already got an extended decline. I think if you get a nice recovery here, you try to short it again. But I'd need to rework these levels for you, Marchin. Divergence, 3 divergence points into the lows. Yeah, this looks like an exhaustive trade to me, but you're basically betting on who's the biggest loser, Aussie or Kiwi. Both respectively versus the dollar are approaching major critical support, right? So I'd be watching those closely. I'd be watching those closely. Yeah, pretty big test of support here. Man, what a big week last week. That was a huge week for Aussie Kiwi. Okay, we'll continue to track that one. And Euro Kiwi. Here's Euro Key. I haven't looked at that in God knows how long. Okay. Wow, breakout. Breakout. No surprise there with the respective Euro and Kiwi price action in and of themselves versus the dollar. It's too much. Hmm. So this is what I'd be looking at, Marchin. And again, this is just off the cuff, right? I'm just looking at this real quick here. That's your key resistance zone of influence. Right here. It's the 764 of the retracement. Okay, it's the 618 extension of the ascent, and it's going to necessitate a break of this slope. Now, I'm not crazy about this. You guys saw me just formulate this slope right now. I don't know if this slope has merits yet, but it would highlight the risk to the long side into 181. Essentially, 80, 57 to 81 is definitely a resistance zone I'd be watching. You know, all things held constant, I look at something like this, and the first thing that pops out to me, Marchin, is the fact that the September, October opening ranges never really gave out. Here's your September, here's your September open, set a low, set a high, test the low, test the high, failure, opens a new month, tries to go for a break of the high, didn't close above it, test the low, holds. Here's the break. If this is legit, yeah, you're moving higher. 81 is going to be the hurdle. Okay, 80, 57, 81, massive critical resistance here on Euro Key over the next few days. Monthly open support 7706. All right, I hope that helps, Marchin. Interesting play here. Interesting play. If you're not already long, brother, don't go chasing this now. But definitely, we'll be tracking this one. Hey, you're more than welcome. Absolutely. And Rohan wants to look at pound yen. Or Ted, I'm sorry. Let me take that first. Dollar CAD. We didn't go over dollar CAD today, huh? That's just silly. Here's dollar CAD, number 9. Or I guess this is whatever we're on already. This is sterling key, Aussie key, and euro key. So Dollar CAD. Looney looks like this. Uh, really ugly. Not gonna lie to you. On the intraday, I hate it. I got really turned off by this since the start of the week. You know, the whole thing was we were looking for that rebound last week off of slope support, or ideally there, right? We got the bump right off support on divergence. We said, you know what? Look for the test of this resistance. If that breaks, look higher. Well, it broke, it rallied, it broke slope, and then what the hell is this? Like, if it's a break, give me the break. If it's a pullback, false break, give me the false break pullback. This is a mess. So I am just keeping hands off dollar CAD at this point. It's the weekly opening range above lateral support at 31.56, 31.62. We've been watching that zone for a while. Um, ideally this bounces and you get the recovery higher. At the end of the day, anything south of the weekly range lows, anything southbound to 31.50, I just don't want to touch it, you know, because the next level of real significance isn't down till 30, 40, 30, 50. That's another 100 pips. I'm not going to fight that. So Ted, I'm kind of pissed off at dollar CAD. If you could pick that tone up a little bit too. Sorry about that, but I'm sure it'll start behaving at some point. Dollar CAD's been a stellar performer when it makes its moves. It's just that these breaks have me all shook. So, I mean, again, even the daily chart, like what the heck, man? Do something, right? We talked about this a while ago. This was a beautiful break. Looked like it was going to be a nice plummet. Turned from no level of significance from a lateral standpoint, just slope. And then you know, probe the highs, failure, probe the highs, failure, just contracting at this point. So, I was looking at this a couple of different ways. You could try to put some color onto the slope and it adds more color, more significance, 3150. If you take that to the top, it gives you a little bit more of an indication in time to look for 33 on the upside. But guys, I think we're just drawing straws here. We need to wait for a valid break. 32.97 breakout, give it to me and we'll run. You could see a failure into this region, in which case you're still looking for 30.50. Now, the one thing I didn't cover was crude. Oops, sorry about that. Which is something that someone was asking about here. What's going on in crude? Here's oil. Oh man, yeah, exactly. Another one, guys. Weekly range is all you need to know on this. Look for a weekly range break to give you the directional bias. Now, at its face, yes, crude is at resistance. Crude is at resistance, and crude is at resistance. We've been talking about that for weeks. We've been talking about it since this ascent here last week. Except 42 into 42.20, I think it is such a massive region. Major yearly swing lows. You have slope resistance right there. Near-term slope resistance just off the two highs from August was there. We already tested it twice this month. Yeah, it's at resistance, but that's not necessarily just a blind short, right? You're still in a very, very well-defined range. So while I think that the immediate risk here into the US Open is lower, you don't want to trade targets outside of the range. So monthly open support 39.83, July 2016 low 39.617. That's it. That's it. You've been in the same range for the last 5 days. No point in trading outside of that range or targeting outside that range unless you're in a position and it breaks. So for instance, if you're holding a short and we get into 39.17, you take a little off the table and all of a sudden it closes below there, hold on to that. That's probably going to be a great trade toward 36. If you have a long in play and you're kind of fading out that long position near slope resistance and all of a sudden this thing pops 42, hold on to that one. You're probably going to see 48. But right now, it's prudent to trade and hold within the range. Make sense? Look for an opportunity to short. What do we need to see? So it would need to be an exhaustion trade like you're seeing right now. So on the daily chart, you look at this right now, you're already marking an outside day, meaning we've taken out yesterday's high, and now we're taking out yesterday's low. If you close below yesterday's low, that's an outside day pattern, not a reversal pattern because yesterday was lower. It was a low down day rather, and this is also a down day, so it's not a reversal, but it is an outside day pattern. Oftentimes those can be exhaustive trades. Here's what it looks like on the intraday. All things held constant, a trade like this, no need to complicate it. Look for a break of the weekly opening range. Now it's only Tuesday. I don't like, defining the weekly opening range by Monday's trade session, But guys, what do I always tell you? Stress price, not time, when you're looking for opening ranges. So it's not so much important that it's Monday, Tuesday, or it's Monday, Tuesday, Wednesday. What's important is that the range is tested and validated. So we made a high, we tested the lows. We tested the highs again. Here's a break of the lows, which were tested twice. So that, in fact, would be a near-term range breakdown if we close below, let's say like 40, 50 on a 2-hour close basis. So those are things I'd look. I'm just giving you indications, Rohan. You're asking your question on what you would look for to play this short. These are the kind of indications you want. You want to look for divergence. You want to look for momentum holds at 60, which is exactly what you're seeing here. You want to see for breaks below 40 in intraday momentum, which we don't have yet, but that would be encouraging. Um, and yeah, you're at slope resistance, you're at lateral resistance, so it's a good spot. Makes sense? Rohan says, thanks, mate, and more than welcome, sir. Okay. That's all I got. Keep it light, guys. Tomorrow you do get core inflation data out of the United Kingdom and Canada. So some of those trades that we looked at with sterling and CAD might be something you get some kick from over the next 24 hours. Other than that, keep your eyes on the headlines with regards to the stimulus talks. I think that's what the market's waiting on. And the SPX coming into these levels definitely should be a very interesting trade session, guys. You've already made a 38.2 of the advance off last month's low. You come off slope support, could see a little bit probe of that upper parallel, but boy, oh boy, this thing has continued to pay dividends. Keep watching this for guidance, and I will see you all bright and early on Thursday morning. Best luck trading, guys. Cheers.